All right, champ, you're doing good. You're doing good, champ. How many fingers I have up? How many fingers I have up? Awesome. All right, you got through the inspection period. Dab it off. Dab it off. There we go. There you go. You're doing great. Now we're on to the appraisal. Keep that in there, Trev. It's personality.
Single family houses with no lease. Going fast like they're racing a Grand Prix. Got more condos, these neighbors ain't lonely. Brand new time, and when I show them, got them saying wow.
Welcome back. So last we were talking about was during the inspection period. Everything is good. You're just happy with the inspection report and you're ready to move forward. The very next step after the inspection period is closed, the appraisal. So basically an appraisal is an apples to apples comparison of the subject property, i.e. the one that you have under contract, versus the other comparable homes that have sold in the area. So if your subject property is a 3-bedroom, 2-bath, 1,000 square feet, single family home with a 2-car garage, the comparable homes around the area that have sold should be,
you guessed it,
very close to 3-bedroom, 2-bath, 1,000 square foot, 2-car garage homes. So at that point, the lender is going to call an appraiser and set up an appointment for them to go and do the appraisal. Basically, the appraiser is going to be going there with their camera and spending about 15-20 minutes max getting pictures of the property.
I just want to take some pictures,
so that way they can have that for their comparison. Now, going into an appraisal report is a very detailed report. What you're going to be looking for is that it comes in at or above your contracted sales price. Your sales price for this property is $100,000. We want that appraisal report to be at $100,000 or better. So let's say their appraisal report comes back at $105,000. That effectively means you've got $5,000 worth of equity right off the rip. Congratulations, that's awesome. But let's say for this video, you got your appraisal back, you're happy, everything is good, the lender says we're great. Now, like I was saying before, there's gonna be a lot of communication in the very beginning parts of this, basically with the realtor specifically. Now at this point, once we get the appraisal done, then communication is gonna shift over to the loan officer because they're gonna be finalizing all of your financial documents, making sure that they have everything right, they have your updated W-2s, you didn't put anything on credit. I hear such horror stories, knock on wood, because I do my best to educate my customers. When you're buying a home, do not, I repeat, do not put anything on credit. Nothing. Change nothing on your credit report.
nothing.
I don't care if you go to TJ Maxx and there's an opportunity for you to get 10% off of your $40 purchase. Don't do it, because that little change could change what's called your debt to income ratio. We call it DTI for short. And if that DTI changes even by the smallest amount, your loan officer may not be able to keep you qualified for that loan that you had initially had just before that purchase.
Yikes.
So fair warning, do not put anything on credit. Pay for your stuff in cash. Make your purchases very small. Don't make any huge purchases during the home buying process until you get the keys in your hand. Hopefully I've drilled that point home far enough for a lot of people. Literally save yourself the headache and the heartache of doing that. Because the last thing I would want is for you to go to City Furniture and have a heyday, buy $30,000 worth of furniture on credit, and then you get kicked out of your loan because you're disqualified, and now you ain't got anywhere to put that furniture, and now you're on the hook for 30 grand. Just don't do it. Wait till you get the keys in your hand.
Coming up next.
Right smack in the middle of your appraisal and your preliminary CD is the 3 magical words that you're going to be looking for from your lender.
I got the tacos.
Clear to close. This means that the lender has done all of their due diligence, they have all their I's dotted, all their T's crossed, everything on your financial side, and you are good to go. When you hear those 3 words, trust me, they will fill you with a lot of joy. Not as much as tacos, but maybe. All right, so during this time, the lender is going to basically get heavy into their work mode, and they're going to be drawing up what's called the preliminary closing disclosure. We call it the preliminary CD for short. So your preliminary CD is what you're gonna get from your lender, and that's gonna be effectively a breakdown of everything to do with your loan. Your mortgage, the terms for your mortgage, your monthly payments, your breakdown of your monthly payments, how much is going towards your principal, your interest, your taxes, your home insurance, all of that. That's going to be your looking over the final amounts and making sure that that's all good. If that's all clear, then the lender will basically have you sign off on that. They'll send it to title, and the lender will be able to balance out their final numbers to give you the ALTA. Basically, this is a detailed net sheet of who owes what. Matter of fact, instead of breaking it down, let me just go ahead and put that up here. This is what you can expect your ALTA to look like. Now, when you get the Alta, this is your last ditch effort to make sure that all of those numbers match up, so that your prorated taxes match up, that your homeowner's insurance is the correct amount on there. Because again, those are all part of your closing costs and your prepaid.
How much does this place cost?
With buying that home, there are going to be two forms of the cash that is going to come out of your pocket. Your down payment. That's going to be a conversation that you're going to have with your lender. They can range anywhere between 3.5% up to 20%. That depends on the type of loan that you get and how much you're wanting to put down. That down payment is just for your mortgage itself. Along with that is also your closing costs. Your closing costs are going to be all of your prepaids. So your homeowner's insurance, your taxes, the points that your lender is going to be charging you, all of those things will be outlined and detailed in your Alta statement at the end. As far as closing cost percentages go, I tell people to budget between 3 to 5% of your total purchase price for your closing costs. That 5% of your $100,000, $5,000 will be for your closing costs, and let's say 5% for your down payment. So all in, you've got 5% for your down payment, 5% for your closing costs, which equals 10% of your total purchase price, i.e. the amount of money coming out of your pocket to buy the home. Get it? Got it? Good, great. So you've got your Alta back, you've run your numbers down, everything looks good. Down at the bottom, it'll say cash due to close or something to that effect. And that's the amount that you're gonna need to wire to the title company. Majority of title companies are gonna want it about 3 days in advance prior to closing. So that way they make sure that the money's clear and everything is good and they have that money in escrow. So anyways, you've got your clear to close. The lender has sent you the preliminary CD, everything looks good. Your title company has sent you the Alta, the cash due to close, looks good. Now, the very next thing that we're gonna do just before you go to the closing table is your final walkthrough.
The final walkthrough.
The final walkthrough is just to make sure that the property is clean, it's broom swept, and everything is copacetic for you to take possession of the property. So during the final walkthrough, this is when I'll go in and basically check all the switches, make sure all the lights still turn on, flush things, turn the sinks on, whatever else, and just make sure that everything is still operating and looks the same as it did whenever we put the property under contract. So we get through the final walkthrough, everything looks great, we'll lock the place back up. We're gonna go ahead and march down to the closing table, and then you're gonna sit down with one of the title reps or a mobile notary, and they're gonna go through all of your paperwork. Majority of the time it takes about an hour or so, but their paperwork is about that thick. Once they're all said and done, their title rep's gonna take the copy of those documents, they're going to scan them and send them off to the lender. But this is basically to make sure that all the documents are signed correctly, dated correctly, or anything that needs to be addressed can be finished up before you leave. What I always look out for is to ask the title rep, hey, do we have a funding number? The funding number is basically the lender putting their stamp of approval and saying, yep, they're good to go, and close the transaction, we're good. Now at that point, once everything is said and done and we've signed all the documents, typically I'll break out a little bottle of tequila or something, and once that tequila bottle is out, boy, we are done. Signed, sealed, delivered, baby, I'm yours. That's the house talking to you. That's basically it. So if you have any questions about buying a home in Florida, please comment down below. If you want to hit me up directly, go ahead and hit one of the little link cards that I'll put up here. That'll get you to a number where you can text me directly. If you found value in this video, I please urge you to like, share, and subscribe. You know, definitely share this with your friends that may be thinking about buying a home, even if it's not you. You may have family members that may be looking to buy a home in Florida. I would love to talk to them too. And thank you so much for watching. Thank you so much for subscribing, and I'll catch you guys in the next video. Peace. See ya.
Single family houses with no lease, going fast like they're racing a Grand Prix. Got more condos, these neighbors ain't lonely. Brand new town home when I show them, got them saying wow.